So the time frame is, guys, is just for those traders. Okay, so this basically means the type of trader you want to become. All right, so you need to know the type of time frame you'll be working on, because the chart is varies and is wide. All right, so first of all, the S simply means scalp, the D simply means day trading, then the SW means swing trading. All right, so over here on the scalp time frame, we have the 1 hour. So the like the pelter sellers, which I tell you guys, they analyze from their time frame, from the higher time frame, which is the 1 hour, the 15 minutes, and the 5 minutes, because they want to get in and get out quickly. Then we have the day traders, whereby they all trade from start the analysis from their 24 hours, the 4 hours, and the 30 minutes, which they want to all trade within 24 hours. They don't want to pass 24 hours. Then we have what we call the swing traders, which they start their time frame from the weekly, the 24 hours, and the 4 hours. Okay, which all these people all trade for weeks. All right, for the entire weeks or for more than the entire weeks. I hope you guys are understanding this section, because I want this everything here to sink in. That's why I'm putting everything together, so everything will sink in quickly. All right, so let's get to work on the next section. So guys, on our next topic here, we'll be talking about the chart pattern. Okay, we just talked about time frame. Now we are talking about the chart pattern. I told you guys how the trend move. And now the chart pattern, it simply means if we are buying or if you are selling. Remember, I told you we don't focus on the range. Okay? So first of all, we want to see what the buy pattern. First, this is what the buy structure looks like. Okay, that is the chart structure. Okay, this is what the structure looks like. So if we are going to a down phase, all right, if we are going to a down phase, right, you can see price clearly moving to the downside. Once we broke structure to the downside, I think I need to leave it that so you guys can understand this. Then I should have the magnetic tool now so you guys can understand this. All right, then we have the down, then also we have what, then we broke. Okay, I'll make here clearly for you guys now so you guys can understand this properly. Now you guys can see price was going to the downside, right? So as price was going to the downside, then with this last leg that pushes price telling us, okay, we just broke to the downside. Then once you see price breaks above this level, then we are what, so we are going to the upside, right? This is where we start looking for what, the buy. So these are the buy pattern looks like. So a lot of people call it change of character, chalk, MMS, and all that, but I'll make all that make sense in a few. All right, which we'll be talking about trading psychology, risk management, all that in a few. So now this is what you get for a chart structure now, and this for a buy. Now let's move for a sell. You can clearly see price where we are going to where the upside. Price we're going to the upside. Then we broke the last leg that pushes the price to where, to the up, which giving us what, the down. All right, which telling us, okay, price is what, all right, which telling us, okay, price is what, we're going to where, the downside. All right, so this is what we'll start looking out for. All right, so now you guys now see everybody will now start looking out for sell, because first of all, price was going to the upside, then it broke to the downside, then okay, we are not going to the downside. I hope you guys now understand how chart structure moves. Now let's go to risk management and psychology. All right, so let's get to this section. I'll be teaching you guys about risk management. Okay, risk management, this is simple, guys. I don't really know why people are stressing much on this risk management and psychology. Now let's move back to our physical market perspective. All right, so on physical market perspective, you want to go to the market. Let's say you have $200, and the $200 you have programmed yourself, like, if I go to the market, I want to buy headsets. Okay, you specialize on headsets only. Then you went to the market, the headset price, they give you the headset price and all those things, right? You buy what, your headset. Okay, with, let me say, you buy at an wholesale price, then you come back to sell what, at a retail price, right? So that's the concept of risk management.